Hey traders! In the dynamic world of trading, identifying market reversals accurately can be a game changer for any trader. Market reversals, where a prevailing trend changes direction, offers lucrative opportunities to capitalize on significant price movements. However, spotting these reversals with precision can be a challenging and often requires a sophisticated set of tools. Introducing our reversal trading combination for TradingView, a meticulously crafted set of custom indicators designed to help you identify and also capitalize on market reversals. This powerful combination leverages advanced algorithms and cutting-edge technology to provide real-time insights and actionable signals. The reversal trading combination comprises of the top-bottom reversals indicator, anchored supply and demand, and pivot staircases, which work in harmony to give you a comprehensive view of potential market reversals. However, before we delve into the strategy, I kindly request your support by hitting the like button and also subscribing to our channel to stay up to date with future content. On the chart for our first example, I've selected the Australian dollar against the Canadian dollar in the 15-minute time frame. I'm going to start by removing all of the indicators and we'll adjust them together so that we can have the same chart setup. Firstly, under the Indicators tab on TradingView, I'm going to add the anchored supply and demand and its panel. Then after this, I will add the top-bottom reversal indicator and pivot staircases. Firstly, for our anchored supply and demand indicator under its cog icon, I'm going to select the following box and then scroll down and unselect the following. Additionally, I'm going to change the color of the different alerts to distinguish them from other alerts. Next, for our pivotal staircases indicator, we'll only be focusing on reversal trading, so we'll unselect the following box and then also scroll down and uncheck the take profit and stop loss option to clean up our charts. Lastly, for the top bottom reversal indicator, unselect the following and also change the color of the buy and sell alerts so that you can identify them from the others. Now that we've made all of these changes, we can cover the exact rules for entry and exit. For a valid sell trade, firstly, we are waiting for the top-bottom reversal indicator to identify the potential end of the current trend and a reversal in price. On top of this, we need the pivot staircases to also show a reversal alert. Remember, under the settings for this indicator, we changed the indicator to only show us the reversal signals. Lastly, we are waiting for price action to reject away from a tested or anchored supply zone, which will look like this. After all of these criteria are in place, we can enter our sell trade. For the sell trade, I will place my stop loss a couple of points above the anchored supply zone and aim for 2.5 times the return. For this example, my stop loss will be set at 10 pips just above the anchored supply zone and my take target will be set at 25 pips. By using the anchored supply and demand, top bottom reversal and pivot staircases indicator, we can precisely identify optimal trade opportunities and manage risk effectively. Remember to consistently follow the setup rules and criteria we've outlined to enhance your trading success. Next, let's explore the exact rules for entering a buy trade. For this example, I've selected the Dow Jones Industrial Average or US 30 in the 15-minute time frame. For a valid buy trade, firstly we are waiting for the top-bottom reversal indicator to identify the end of the current downtrend and a potential upward reversal in price. On top of this, we need the pivot staircases to also show a bullish reversal alert, which will be marked as follows. The pivot staircases uses a proprietary algorithm to detect when price has become overbought or oversold. Lastly, we are waiting for price action to reject away from a tested or anchored demand zone. This will look as follows. Now, once the candle has closed that confirms the rejection away from the demand zone, I will enter my trade. For this buy trade, I will place my stop loss a couple of points below the demand zone and aim for 2.5 times the return. What this means is for every 1% of the account that I'm risking, I aim to make 2.5 times the return. In other words, a 2.5 risk to reward ratio. Next, let's explore another trading example and look at what the indicators are doing as a part of this strategy. For this example, I've selected the US dollar against the Canadian dollar in the 15-minute time frame. Firstly, our top-bottom reversal indicator is based on a unique chart pattern that combines several extreme conditions to pinpoint tops and bottoms in the market. It combines the relative strength index with Bollinger Bands, which are marked in yellow on the chart, and a unique chart pattern to show potential end of trends. On top of this, we use the pivot staircases that are constructed with dynamic support and resistance levels. These levels use previous days' high, lows, and close, along with Fibonacci numbers. This results in a more accurate and actionable trading setups. Lastly, our anchored supply and demand pro ensures that we have a rejection away from the zone for the trade to play out. From the chart, we can see all of these in action, waiting for confirmation in the change of trend with the rejection away from the tested supply zone. Now, once the candle has closed that confirms the rejection, I will enter my short trade. For the sell trade example, I will place my stop loss a couple of points above the supply zone and aim for 2.5 times the return. For this example, my stop loss is set at 13 pips and my take target is set at 32.5 pips. Next, let's explore another trading example focusing on a cryptocurrency. For this example, I've selected BTC USD or Bitcoin against the US dollar in the hourly time frame. The strategy that we are covering isn't limited to any specific time frame or instrument, and you are able to use it across various instruments and time frames. From the chart, we can see that we have a sell alert from the top bottom reversal indicator. Additionally, we see price action going above the dynamic bands, and we see a sell alert from the pivot staircase indicator. Lastly, at the same time of the rejection, we get another alert from our anchored supply demand pro, which shows enough momentum on the bottom panel, which gives us the final alert. Now, once the candle has closed that confirms the rejection, we can enter our sell trade. For the sell trade example, I will follow the same risk management rules as before, placing my stop loss a couple of points above the supply zone and aiming for 2.5 times the return. With this example, you can see how the combination of our indicators works seamlessly across different instruments and time frames, providing you with clear and actionable trade setups. Next, let's explore another example. However, before moving forward, if you want to learn more about the indicators featured in this strategy, we've created video guides for each of them that's available on our YouTube channel. For this example, I've selected Meta Platforms, ticker symbol MTA, in the 5-minute time frame. When trading on the lower time frames, you will often receive multiple signals in a single trading session. And this is exactly why it's important that you need to follow the steps that we've outlined in this video guide. From the chart, we can see that we received 2 buy alerts from the top bottom reversal indicator, showing a potential end of the downtrend and a shift in direction. Now, on top of this, we are also waiting for a reversal signal from the pivot staircases indicator. We can see from the chart that price action was range bound for multiple candles before we receive the additional confirmations that we need to enter our trade. For this reason, it's important that we need to use patience to wait for all of the signals to align before entering our trade. Now, following the same rules as before, I will place my stop loss a couple of points below the recent demand zone and aim for 2.5 times the return. All of these different alerts that we use for the strategy can be set up via alerts, meaning you don't have to sit in front of the charts and wait for them to happen. Next, let's explore our last trade example. For this example, I've selected XAU-USD or spot gold against the US dollar in the 5-minute time frame. From the chart, we can see a quick downtrend in the precious metal with candles closing outside the custom Bollinger Bands. Additionally, we receive a buy alert from both the top-bottom reversal indicator and pivot staircase, showing a potential stop in the downtrend and reversal in price. Lastly, we see price action rejecting away from the anchored demand zone, giving us our last bullish alert. Now, once the candle has closed that confirms the rejection, I will enter my buy trade. For the buy trade, I will place my stop loss a couple of points below the anchor demand zone and aim for 2.5 times the return. From these different examples, we can see that these indicators work in harmony, providing actionable, clear signals across various instruments and time frames. By following the precise entry and exit rules outlined in this guide, you can effectively manage risk and maximize returns. So if you haven't already, we invite you to visit our website and explore some of the fantastic promotions. The promotion that stands out above the rest is our TV Champ membership. With the TV Champ membership, you'll gain access to all of the indicators featured in this video, plus multiple other next generation indicators. So I hope that you found this video helpful and also informative. Until next time, happy trading. Bye.